I think where you get in trouble in general, morally, ethically, regulatorily, is when you sell something to someone that they don't need or they don't understand. So we just don't see it as our mission to convince a lot of people to buy Bitcoin. We see it as our mission right now to help people who've decided to buy Bitcoin to have a great way to own it.
Went all in, play my cards right. Up the ante, won blackjack all night. Roll the dice, let it ride. Water the odds, I got snake eyes.
Entrepreneur Perspectives is produced by Quiet Loud Studios, a production company and content network. Learn more at quietloudstudios.com. So podcasting, so many people want to get famous on podcasting, right? And that's not what we're looking for. I want to have interesting conversations. Like, I want this leverage piece so I could reach out to Zac and be like, hey man, what you're building is really cool. Would you want to hop on a podcast and talk about it? If that can help you and your company, your brand and your story or whatever, like, let's do that. And then people find us that way. And no one has to listen to the podcast, but maybe one person, right? And that has leverage in and of itself. So if someone's looking to build a podcast to monetize it, to get fame out of it, or whatever that thing is, that's tough. It's very tough. It's like, you want to write a book? That's cool. Like 99% of book sales come from like the top 1% of people who are writing the book. So don't write a book to make money. And anyone would tell you that. Like, we had Eric Jorgensen on, like, his book went viral and it was a great book and over 1 million copies sold. Like, and he even would say like, that's just not expected and normal.
Yeah. It's interesting. The book business is like the venture business. People don't realize that. Like, most books lose money for the publisher and then they have these hits.
Yeah. Yeah. And you don't know with podcasting or a clip, or you say something and we clip that and it goes on YouTube Shorts or TikTok or what have you. And people find that fascinating. Like, people found us through our content. And so what happened is we're writing blog posts. A founder came to me, a business owner, and he said, we had this conversation. He's like, can you do that for me? I have different interests and I have a different background and I have a different story to share. Can you help me tell that story? Like, absolutely. So we started creating blog posts with it. So like, okay, this is fascinating. All these people are saying, don't do this. And here comes a founder that we didn't ask to talk to, who lived all the way in Salt Lake City, Utah, and we're in Charlotte, North Carolina. And he found us through content. And no one had listened to our stuff yet. No one had read our stuff yet, right? Aside from my aunt or my mom or someone like that, right? And a couple friends. So media and leverage, so being able to have that conversation, having people find you. We have clients that one of the best things that they've ever done is they'll have their people on their team record podcasts. All of a sudden, a massive issue in business is your employees. Can you keep them on staff or not? These kids are not kids. I say kids, but like, if you say you're hiring people out of college, they get a job and immediately they're trained to start looking for the next job while they're at that job. Then they go to that and the cycle starts. So what do you do? And they talk about culture and this. And before it was like, let's have yoga and let's have coffee bar and all this kind of stuff and nap time and whatnot. It's actually like they want to be a part of it. They want to have a voice in it. Now, you have to be careful in that, of course. But like, if you're trusting these individuals to get on the mic and talk about their story and whatever that might be, that's huge. And those people aren't going anywhere. And so it's also a recruiting tool. So I found it to where it's gotten easier. And it's also gotten harder because you just continue to level up and there's more things that you want to do. So then you have a team of people, you have engineers, you want your audio to sound great, all the above. So
yeah, I'm in an intermediate step where I've been doing enough podcasts where we have gotten a bunch of like the stuff, but I haven't set it up yet. I have a really fancy microphone, but then I realized I need a preamp. My goodness, it's all because I'm not in the content business.
yeah. Well, and you know, in many ways, like you are, because you've been on a lot of shows. And I'll tell you this, I get an opportunity to listen to you before you ever come on here. I've already seen you talk, right? I've seen you write. I've heard the message. I can hear like what your thoughts are. I can hear about how you talk about the insurance industry before we've ever communicated, right? And that's super useful for me, and I got it through searching it. And then I go to your website and you got some of those videos listed. It's just not on your own platform, but in a way it is. And you could always take those. You could always go back to those hosts and say, hey, can I get a copy of those files? And I want to reframe it, put it on our own podcast, our own show, our own YouTube channel. And that's just a very easy way for people to find it. But it's wild too, because at one point there was no one doing it. And everyone's like, well, now everyone has a podcast. And to some regards, like that's what it seems like, because you just feel like that's the bias tells you that everyone has a podcast. Well, go ask the next 10 people you talk to. maybe you would be different, but most people do not have a podcast. And there's a lot of room in that space. But the room is not necessarily to become the next Joe Rogan. Maybe you can. There's other aspects of it. Like, I don't even know, when you got some funding and you've been on storytelling mode and a lot of showing up on shows, have people found you as a result of that? Like, have people connected with you because you showed up on this show, you're on Joe Pomp's show or Anthony Pomp's show, Joe's his brother. But were there any sort of connections that drawn there?
Yeah. I mean, one of the reasons we do it, or I spend the time to do it, is exactly for that reason. Like fundamentally, our user base currently, who buys Bitcoin whole life insurance, right? It tends to be like high net worth, 35 to 55-year-old man, somewhere between like serious girlfriend and 2 kids demographically. And that person is actually like a prime podcast listener, right? And if it's your podcast and it's maybe more entrepreneurial, like maybe it'll be fewer crypto people, but there'll be more, some more insurance people or just people who, decide to have 5 or 10 Bitcoin in exposure. And, our product can make a lot of sense. So yeah, I think it matters. And then the other big thing for us is, in crypto, there's a lot of like Ponzi schemes and scams and, meme coins or shit coins or whatever. And we're the exact opposite. Like, we are running an insurance carrier, and an insurance carrier is very much based on trust. And the more places we are, to your point of like folks Googling us, that just lends credibility. And it lends credibility that like I'm not some anon guy who's going to take all the Bitcoin and flee to wherever, that this is like a real institution. So going on podcasts, like raising the additional $40 million, releasing our financials, which we're planning to do next month. These are all just like steps, not necessarily in a perfectly designed plan, but they're just like, brick by brick, building more trust. And that's the difference between us having tens of users and hundreds of users and hundreds of users and thousands of users, or policyholders, I should say. Yeah.
Yeah. What does the insurance industry, when we first got on here and telling you that I've been in the industry for a while, my grandfather was in the industry a long time ago. And you talked about these companies they've been going on for a couple hundred years. The Mass Mutual of John Hancock. I mean, they pride themselves on how many years they've been in business, right?
Yeah.
What has been their response, if you've had any communication with them? Not those companies specifically, but just the industry.
Yeah. Well, let me say 2 different things. The first is, if you actually read about the life insurance industry in the 19th century, it was like the Wild West. It was like crypto is today. There were tons of companies. People were going door to door. They were like frauds and like blow ups and Ponzi schemes. So I think that there's just a relationship between like new financial product, particularly around savings, and like a certain element of, edginess around that product. So I really think in 100 years or maybe 50 years, crypto is just going to be this like boring thing, just like a Visa card is boring, and just like New York Life is boring, and just like the Bank of New York is boring. But, when these institutions were founded, they seemed cutting edge and exciting, and like they had competitors who weren't doing like exciting things.
Yeah.
The second thing is just like the reaction. We have some carriers who are investors. I think, I'm sure we'll get into it, but we've done something somewhat unique in that our entire carrier is denominated in Bitcoin. So it takes premiums in Bitcoin, it pays claims in Bitcoin, it does its audited financials, its solvency calcs, everything's in Bitcoin. And that way the entities like, doesn't matter what the price of Bitcoin is. It's just like safe. And I think a lot of the like actuaries and finance folks, they're very conservative. So they think the idea is crazy, but then they'll say something like, but if you were going to do it, like that's the way to do it. And then over time, like I actually was just on a phone call this morning with like a big name carrier, and they were talking about like okay, BlackRock and Fidelity are out there saying that you should put 1% of your retirement savings in Bitcoin. Like, how do we position ourselves to maybe also say that 1% of your like savings are in annuities, or 1% of your permanent life insurance should be in Bitcoin? And that's going to take 5 years for them to figure out, but we're positioned to help them on that journey and ultimately potentially hold that risk on our balance sheet. So I would say, the default position of the incumbents is indifference. And then the evolving position is like mild interest.
Yeah. A couple things. I want to ask two questions. First one is, can you name any of the carriers that have invested in it in you all, or can you not? And then when I think back to conversations I've had with, and I'll use John Hancock because they've told us this is disclosed, where they're putting their money, people invest premiums. Okay, where's that money going? They're investing in alternative investments. They prided themselves, and I can't remember, I might get this wrong. I think it was lumber, right? That was a big thing that they're investing in. For some person that might be like, that sounds crazy, but it's to your point, like it's alternate investments, right? It's not the typical hedging something or, money markets or whatever, stock market even. So just saying all that, going back to the first question, then kind of leading into what I just said.
Yeah, we have two carriers. One is public, it's a Japanese carrier. It's called MS&AD. They have a pretty active venture group. The other carrier is a top 5 carrier in the United States, and we're not supposed to say it publicly who they invested.
Okay.
But you know their name.
Got it. Fair enough. Yeah.
On the second question, I think that's right. Like, look, the balance sheet of an insurance company is overall designed to be very safe, right? So you end up with a lot of treasuries, a lot of investment grade credit. There's a lot of work now to like get, more private credit. And that's why also a bunch of big private credit shops like Apollo and KKR and Blue Owl are buying insurance companies or seeking to manage the assets of insurance companies. It tends to be a pretty small proportion of the portfolio that's like venture capital or private equity or now crypto. New York Life, Mass Mutual, it's both public that they're investors in a fund run by Stonebridge, which is an asset manager that just like gets exposure to Bitcoin. I think the distinction that I would draw is it's one thing to have a $100 billion balance sheet and put $10 million into Bitcoin exposure. And it's another thing to design products that are giving that exposure to your customers. And I think that is what we do. And that is what we, think that more people will do, more carriers will do, and we'll be able to support them. But I'll be honest, like, this is not where we started the business. Like, we started the business much more from the crypto angle, to be honest. Like, I can go on my backstory, but my co-founder and I are very comfortable in regulated financial services. We've done a lot of stuff in banking and fintech and payments. And we sat down and said, like, okay, there's basically this new economy that's being formed. Like, it's a new country, which just doesn't happen very often, right? And we are comfortable with this regulatory BS. So, like, what are the regulated financial institutions that exist in every single country in the world that's developed? And you can like make a list and you can be like, okay, there's a stock exchange and there's a payments company and there's a bank. And actually we didn't think of life insurance. And then like a couple of weeks later, I woke up in the middle of the night and I was like, oh, there should be there should be like a crypto life insurance company. So our framing was very much like, okay, there's this new economy. It's not going to be the biggest economy in the world, but maybe it's like a top 5 economy. It's weird because it's global. It's decentralized. It's outside the control of any government. Let's build the life insurance company for that economy. But then as we have like spent a lot more time in the industry, in the life insurance industry in particular, I really don't know anything about P&C, you begin to realize like, oh, there are trillions of dollars sloshing around and there's like no technology. There's like no reasonable software. And we've sort of fallen in, like, we wanted to do this new novel thing. So we have a functioning life insurance company that has like 10 people, which is just like crazy. But actually, we couldn't have done that in dollars because technology is not enough of a wedge to like start that business. Because like, oh, great, you've turned a 12% return on equity business into a 15% return on equity business. Like, it just doesn't matter when you're small. It matters a lot when you're big. It doesn't matter when you're small. So the insight that we have in retrospect is like, oh, you need a product that no one else has. And if you have a product no one else has, then distribution wants to talk to you. Policyholders want to engage with you, despite the fact that we don't have a credit rating yet because we're too new and small. People want to fund us and give us money. But if we just started a straight down the middle dollar whole life company, we wouldn't really be anywhere, I think. And now we realize we're building a super innovative insurtech company.
Yeah. Well, you're right. I mean, the technology they're running off of legacy systems, as I mentioned before. So you can definitely change that, but where's the differentiator, right? That's in anything. And when you think about these carriers that have existed and then the agents that represent them, because you talked about distribution, I want to get into that a little bit. Are you all selling this? Is this accessible for agents to go out and sell it? Because then that brings in a whole nother slew of things going on. Because who are they talking to, right? Because we're in the life insurance brokerage business. Okay, so if we partner with a John Hancock or Mass Mutual or Prudential or whoever, we have to get licensed with them. They have to agree that we can sell their product. Okay, who are we talking to? And there's going to be underwriting going on there. But as it relates to this, what's that look like from the sales side of it?
So look, we're an offshore carrier. We're regulated and licensed in Bermuda. We're not supposed to sell or solicit in the United States. So we sort of operate in this reverse solicitation basis. So people approach us, they can come to our website, they can do direct sales. We're just starting to have agents, reach out to us. And then that is a question of, we don't want to put people in a position that they're not supposed to be in from a regulatory perspective. So this is a delicate dance. A lot of the big agencies, national agencies, they'll often have a group that specializes in offshore life insurance for high net worth individuals. And they have setups that they manage about how to manage the regulatory stuff. And I don't have an opinion on that. That's for them to do, right? We have some Cayman subsidiary, and so what's important to us is that we as a carrier are very careful to not actively sell policies in countries, and then they have people, but people find us. I think people are really intrigued by Bitcoin life insurance, and then that's sort of what our sales process is. And then over time, we'll go through the hard work of building a carrier in the US or building a carrier in Europe. This is the 0 to 1 action to prove that people are interested in this product.
Yeah. When Sam Altman, I don't know how that looks, right? I'm not saying he's picking up the phone calling you, but when that happens, and you had kind of referenced it before, and you're talking about, there's this product that no one else has. So somehow you're getting some of these investors like a Sam Altman coming to joining the game. How does that take place? What did that look like, if you can share? Or it doesn't have to be him specifically, but people like that getting into the mix and saying, this is fascinating, we're interested in it. And I don't know if at that point you're do we have something here or do we not? I have no idea. And all of a sudden the phone rings.
Yeah, look, I can talk about Sam in particular. Sam and I aren't particularly close. We knew each other. I went through Y Combinator with an earlier company in 2013. He wasn't the president at the time. Paul Graham was still the president. YC, for those who don't know, is a startup accelerator of great success, maybe the original accelerator. Companies like Stripe and Dropbox and Airbnb went through it. But we knew Sam vaguely. He knows my name, he responds to my emails, but we're not buddies or friends or anything. So, my first company, it was a success. It was a failure. It was an acqui-hire plus sold to Silicon Valley Bank when Silicon Valley Bank was a going concern. So that startup was somewhat successful. Folks know, maybe a second-time entrepreneur. We're pretty good at that. I'm pretty good at this. My co-founder had founded a company too. So what we did is, this is very venture-y. So it's a particular type of entrepreneurship. You don't want to pitch one person and then wait a week and then they say no, and then you pitch another person and they wait a week, because there's a lot of fear of missing out, and there's just a lot of dynamics that when if a lot of people say no, then like, why does the like next person want to say yes in like the closed community of venture investing? So what you want to do as an entrepreneur, if you can do it, which is really hard as a first time venture-backed entrepreneur, but like somewhat easier as a second time, is you want to like talk to everyone at once. So what we did is like in early January 2022, I like send all my angel investor friends an email saying like, hey, we're doing this thing. Like, here's the memo. Like, let's set up a call. And then we got like a ton of people to say like, oh yeah, I'll invest 25K. I'll invest, 100K. Like, and then what happens is funds start to reach out to us and say like, oh, I hear you're raising something. Like, do you want to chat? And I'm like, no, I want to chat the third week of January. So I want to talk to like all the funds that are going to potentially lead this the third week of January. So it's like the first week, then I'm like setting up all these meetings for the third week with like big name venture capital funds. And then the second week, Sam reached out to me, or someone that Sam and I both know, Lockie Groom. He and I chatted about the business. And then he called me the next day and said like, hey, Sam, I mentioned this to Sam. Sam like really loved it. Do you want to chat? And then Sam and I had like a 1 hour call. And Sam's like incredibly bright, has a lot of pattern matching, asks like really smart questions. And then at the end of the call, I was like, great, can Lockie and I like co-lead the seed round? And I was like, yes, because I mean, like ChatGPT like wasn't out yet, but like Sam was, still important in the Valley. He's super sharp. I knew he'd like help, but not get in my way, get in our way. And also, perhaps most importantly, like, he just wasn't gonna, it was like low drama. Like I didn't have to have all those meetings that I said I was gonna set up. So it was like done. I think why Sam did it, to answer that question, is look, the framing we have is life insurance is this critical financial service, is really about like helping people save for their kids, save for their loved ones, protect themselves. Our ambition is to serve 1 billion people, which is like 5 times as many people as are currently have life insurance or annuities in the world. And how we're going to do that is we're going to reach them with digital money, and we're going to service them profitably with like AI and automation. And I think that like relatively straightforward idea in the context of that like huge scope is like the kind of thing that Sam's into, right? He doesn't do a lot of fintech deals. He wants to do nuclear reactors and like change the world AI. So I think it was that scale of saying like, okay, we are starting with rich people. That's like what we do now is like we sell protection products that are also tax products for high net worth individuals. But then systematically we want to go down market. Like the ultimate vision is like, if you were a lower middle class person in Argentina or Nigeria or Turkey or yes, the United States, like you might not buy life insurance because like you're going to live longer than the Argentinian peso. Or, you're going to see in the last 5 years, 20% of the purchasing power of a policy go down because of inflation. So the idea of this like global decentralized store of value, we think can make these products more accessible.
And they see that too. Sam sees it. These investors see it clearly.
Yeah, or I don't know. I don't want to say
they like
that,
the idea. Yeah.
Sam's thinking hard about it, but like I think the overall we have some investors who are thinking really hard about. Like we have some insurance investors. The carriers are named, but also like insurance asset managers, and they're like, this is a way to reach a ton of people. The technology is amazing, and like fundamentally, we sell life insurance to like people under 50, which is in general like a relatively hard thing to do. So that's like really exciting. And then we have some like crypto folks, like the people who led our $40 million Series A or 2 crypto funds. I think they're coming at it much more from like this is a new economy. Like we believe in crypto. We believe this is global. Like having a boring staid life insurance company inside that space makes a lot of sense, right? So I do think that like we're somewhat different from some companies in that like we have different classes of investors, like tech investors, insurance investors, crypto investors, and they sort of like see different parts of the whole and are motivated by that. But it's all, the same goal or the same aspiration.
Yeah. Frameworks, I believe this was their largest investment,
Yeah.
if I read that correctly.
Yeah.
Yeah, that's great. Yeah, I mean, and that's a good point that they're seeing it both from and it's a diversification for maybe the insurance companies or whoever it is to say, hey, we have a lot of these types of companies. Well, let's bring in this side, and the other side, this is more the stable cup, right? So depending on what angle you're coming at it from.
Yeah. It's very interesting.
Yeah. Okay. Underwriting is obviously a big deal. There was this time when it was going to be rapid underwriting, right? Accelerated underwriting, all these things, data. We're going to use data. We're going to pull it. In many respects, it's never been harder to get a life insurance policy through underwriting. You can call one of our top salespeople and he'll tell you like the mess that it is. And they'll go 3 weeks through the process and everything's going to be very simple. Next thing you know, they want to order 3 APSs, attending physician statements, your doctor's records, basically, for anyone listening. And it could take months and then to get a decline and all that kind of stuff. But understanding that we have to understand what's going on with the client's health. When you enter this field, right? And we're talking about products and you're talking about the technology and using AI and automation, all that's great. Underwriting is obviously a key component to all of this. What has that been? And I don't know if you dealt with underwriting in the past. Who are the underwriters? Are you outsourcing that? Do you have your own team of underwriters? And then are you doing it through data? Or are you doing medical exams, ordering, attending physician statements, all that?
So we have built our own internal underwriting system in the sense that like we make the decisions ourselves. We have an underwriter and a second line underwriter review. To be honest, the policy coverages that we're providing right now are in the like 2 Bitcoin in face amount. So like 200,000 to like 50 Bitcoin, which is, $5 million. So we are willing to do more of a simplified issue style thing. And then like, look, these companies are very different. They're not carriers. But if you look like Ladder, Ethos, Lemonade, these are all companies that have like digital first flows. We have a digital first flow as well. We get, with your permission, we get a shockingly large amount of medical records and, prescription drug history and all of that if you're an American. So we give answers very quickly. It's not quite instantaneous, but it tends to be like same day. Having said that, like we're quite conservative. We're a small company, a small insurer, and we try to reject people early. So they're giving us like any indication in their application. Like we'll sort of just like say, hey, this is like not going to work. But we've probably rejected like a quarter to a third of the people who've like gone through the flow. But again, we try to make that not feel like what you just described, like you're on the edge of your seat for weeks, but rather like, hey, you were really upfront with us that you love to scuba dive. Like that's, just not going to work for us as a small company. Or, you can scuba dive a little bit. You're like, I travel around the world.
Yeah, where are you?
Yeah. Or, all these things like, and we're very candid with people. Like we haven't designed a ton of like 26 subclasses and like all the little differentiated pricing you might have at a big carrier. But again, it's not a slow, drawn out process. So maybe that's what technology gives you, is it gives you a fast answer.
Yeah. And I think it's tough for the carriers, right? And they're dealing with, how many applications are they getting per day, right? So I understand what they have to go through to figure that out. And then you have agents out there that, what do they know? It used to be field underwriting. It used to be like you sit down, you're at the kitchen table. Okay, I can see your smokes over here. I can see the food that you're eating. I can see that you're out of shape. Whatever that thing is, like you can just look around the house. That doesn't exist today. It's so archaic in a way that they want to know where the policy was signed still. Yet here we are talking. And where are you right now?
San Francisco,
right. So we're at other ends of the country. Like, but we could still have a thing. Like if I'm in your state and you're in my state, like what does it matter? And they're so worried about the state lines and all the, North Carolina has different laws than California. And I get it, but that just shows you how dated this thing is, right? The policies that are all, and the applications and the process are still built about what we were doing back in the 1960s, 70s, 80s. Well, things have changed very drastically.
Yeah. If let me like make 2 points from what you're saying. The first is just
please.
We have the advantage, and it is just an advantage of starting from nothing. And that's like a classic innovator's dilemma like story. So one, we have this product that no one else has. It'd be relatively hard to replicate it. Like your risk committee has to approve it, blah, blah, blah. On the technology, right? The example I give is we have our own policy admin system. And sometimes people are like, that is amazing. It's crazy. And I'm like, well, but what happened is we started and we had it so the owner and the insured had to be the same. And then we had so many people say like, no, I want to own the policy, but I want my wife to be the insured. And then we added that feature, right? And then we had so many people say like, oh, well, I actually want my policy to be owned by a trust. So then we had to layer on doing know your business instead of KYC, right? So we were really able to have the minimal viable product. It was still quite large, right? There's underwriting, there's know your customer, there's like anti-money laundering rules, there's like payments and crypto. There's all this stuff to get the nub. But we did really start with the smallest thing. And then like as users demand more complications, we can do it. And we only have originally we had one product. We had a 10-pay whole life in Bitcoin, right? So you pay us 1 Bitcoin a year for 10 years. And then we, pay 15 when you die. Okay, well then we had so many people who were like, I never want to think about this. Like, can you have a premium deposit account? So then we like layer on a premium deposit account. And then we have so many people say like, oh, I want this whole life product, but it'd be great if you had like a fixed deferred annuity in Bitcoin. But we're able to like spread all those things out where we're like adding layers of complexity like onto the system in true like startup fashion, but still conservative in a life insurance company. The problem with like Northwestern Mutual or John Hancock that you mentioned or Lincoln or whatever is not that they don't have like decent technologists, it's that they have that 200 years of history. They have files that were digitized in 1970. They have other files that were digitized in 1990. They're like in different systems. Maybe they merged, they bought a life insurance company in the 90s. So now they have like 5 systems. So they're all in this like, I joke that they're all in their like 3rd 5-year digital transformation.
Yeah.
And it's unfair in the sense that like we just have an unfair advantage, which is like starting from nothing. Now, the disadvantage is like we have a trust deficit to overcome and like we're small and no one knows our name and like we have to figure out this. So like we have many disadvantages, but the history of legacy overhang is not one of them.
Yeah. Mark Andreessen was just talking about this. He's like, these bigger companies are going to have a hard time pivoting and keeping up with this, where the builders over the next 4 years, like during this age of AI, they're going to be the ones that are going to be able to create these new products just exactly like you're saying.
Yeah. And again, that's how we can have like 10 or 12 people now is basically, other than legal, we have like one person in every department, right?
Yeah. Yeah.
So we have a chief risk officer. He's like an actuary. We have a head of insurance who's like a pricing actuary. He used to lead the individual life insurance business at New York Life. We have a chief compliance officer. We like have an ops and finance person. And then the idea is not to grow those teams. Actually, then the rest of the team, right, is software engineers and designers. They're 2 sales guys. And then the idea is that, okay, for every additional thing that the pricing actuary needs, we're actually building software for that. So like we actually close our quarterly financials in like minutes, which is again only possible because we're starting small and it's simple, but then like we will add complexity and that will like always be true. And that's it. It's an unfair advantage that we're not like trying to implement the latest AI tools and coding. Like we have just done it. And then like we're building everything from scratch.
Yeah. You saw that need. I think it's fascinating too. You mentioned, what does the individual for New York Life do for you that used to be at New York Life?
He's the like head of insurance, chief insurance officer.
Yeah. Yeah. So, I mean, that's fascinating.
This guy actually, he's amazing. His name's Jim Cristallo. Jim, he like led the third-party distribution business at New York Life. He led Bowley Coley, and then he was the leader of the individual life insurance business, like the life in New York Life. And then he had like a midlife crisis and decided to go work in crypto. And he was like doing that for 6 months. And then John Kim, who's the former like president of New York Life, heard about our company and was like, hey, Jim, you should go talk to these guys. And he was like, oh, this is the company I should have started, right? So he's like a true believer, but he has like all this history, all these relationships, all the trust of like, folks knowing that, I don't know, we're able to read the mortality tables or whatever they're worried about.
Yeah. I'll tell you what, I mean, there's many stories where you call up, let's say MetLife, it's old kind of, Met Bright House and all this. And you have a policy that was bought, let's say it was bought in the 1970s, old whole life policy. Those calculations are really gone. So I can't call the mainline number and talk to someone who's going to understand how to run future projections on that policy. So I've talked to people, they weren't really here, but like in the basement of MetLife, right? They were there, they understand it, they can run those calculations. And it's kind of weird that you had to go dig deep for it because the technology doesn't allow you to just run those calculations. Like we literally physically cannot run these here. So it's like, well, that's a problem because we have this individual who's, let's say, 87 years old and we're trying to figure out this life insurance policy. Okay. So let's fast forward 50 years from now where your company's at. Obviously, you have the technology with it. Sometimes those concerns are, yeah, but John Hancock Mass, MetLife, they've been doing it for years. There was still a way to get to it. Maybe we had to go find someone in the basement that knew how to run these projections, but the concern is not necessarily today. The concern is the future because this policy might be enforced for I don't know how many years, right? How are we running those projections down the road? I mean, obviously you're thinking about this and you have individuals from these carriers who they always say in the industry, it's like, we know where the bodies are buried type of thing. You know what I'm saying?
Yeah. The problems actually that the life insurance companies face is they actually digitized relatively early. So this happened in banks too. So like we think of them as very arcane, but actually it used to like all be on paper. And then in the 50s and 60s, they were among they're not stupid people. They realized like, oh, this is exactly what computers are good at. So they actually digitized early, but now you're 50 years later or 70 years later, and you're like, we computerized early. And then so now we have all this stuff on punch cards and written in COBOL and BASIC and like these technologies that are these programming languages no one uses anymore. So I think that like culturally, we hope to be a little different than incumbent life insurance companies. And we think a lot about this problem. Like we are very aware that we are receiving like incredibly important, sensitive, like personally identifiable information from our users. And we need to hold on to it. But we're not supposed to access it again for 50 years. It's like a hard, like legitimately hard technical problem. And like you can think about it and you can build around it, but it is not like solvable. So like if Meanwhile exists in 100 years, like maybe there'll be some whatever neurochip podcast download that people will be talking about how that Meanwhile, like they they're just behind the times. It's just a hard problem.
Yeah. Are you worried at all about, and I think you referenced it maybe a little bit before, the bad actors? So investor-owned life insurance became a thing, right? Like you had said, back, 50 or 150 years ago, the issues that were happening in the insurance industry. Well, not that long ago, there was the Sun Life fiasco and there was investor-owned life insurance and people were buying $40 million policies on people that there was no insurable risk there, right? Like, well, what's the relationship?
Stoli, yeah.
Yeah. So now you get into where this is, and there's concerns, right? Like, okay, who's in this field? Who's in this space? What concerns do we have? What do you think about as it comes to that?
Yeah, look, in some ways, we are the most boring conservative carrier in the world, in the sense that like we have a straight down the middle policy from like the 1830s. Policy I described to you. You pay us 10 equal installments and we give you a fixed guaranteed payout, right? So now, yes, it is in Bitcoin. So that is like really weird. And some people perceive that as super safe and other people perceive it as super risky. But the core mechanics of the company are very straightforward. And that is on purpose. And I know that you own an agency. This is actually a hard thing sometimes when we're talking to agents. We're like, hey, I know that if you sell this like complex IUL product or whatever, you're going to get 120% first year commissions. Like we just did not price the product that way. Like it's like relatively thin margin, but this product is right for a certain set of people. And like, by the way, like for most folks, we're seeing it's like an upsell, right? So if you are doing some like $10 million, estate planning thing, adding $1 million of Bitcoin coverage might just make a lot of sense. And then like you can think of that from the agent's perspective as like, maybe I get to seem innovative, or I get to like do a service, or it's like an additional thing or whatever. But fundamentally, like that's a belief we'll have, and we see how it goes. Like we think that tons of products have been, putting like life settlements and solely aside, like even just like the stuff sold by a John Hancock or a Lincoln or whatever, some of this stuff just seems like too complicated to make. Like, okay, you get index exposure to the S&P 500. There's a floor, but if it's 2x this hurdle rate, then it like switches over to this and then like everyone gets dinged by regulators on the illustrations, which is like half because the illustrations are wrong and half because like nobody can understand these products. Like that just doesn't seem like, from a policyholder perspective, like, again, to go all the way back to the beginning, like this is a core fundamental human problem. What happens to my family if I die before I am supposed to? What happens to my family actually if I live longer than I'm supposed to? Like that's an annuity, right? These are just like very human things. And then they are like needlessly wrapped in complexity to create margin and commission structures and blah, blah, blah. So one of our hopes is, one, just for our own discipline, is to keep things simple so that like we can understand it and we don't end up like doing some of the stuff you talked about. But also I think that is actually a way to sell more life insurance in the world, is to have a simpler set of products that like clearly aligns with the policyholder. And if you do that, then I think you may sell smaller policies or lower commission policies, but I think you might sell more policies. And then like, what is the purpose of technology in this world? The purpose of technology then is to equip the agent to be able to sell more policies, because underwriting is faster, to your point, or because like updating an address is easy to do, so it's not something that your admin is doing, or you're getting a same day answer on an annuity so that, maybe you can like close a bigger sale on an easier product because it's like just happens, or, paying commissions out same week because like you've done the work. So why don't you get like those sort of like operational and technological efficiencies can serve the goal of having a like better, simpler, more aligned set of insurance products.
Yeah. Well, I'm coming at it from a learning perspective of what you're building and asking the questions that could seem like, hey, I'm trying to figure this out and I'm pointing out this or that. And because I know the questions that I'll get on the back end of it, but I don't have to answer them because I could just direct them to here, because this is what we learned. Because the thing I was thinking a lot about when I've heard you talk about this before, and even more so today, is these index UL products. And so I talked about like when you call MetLife and you're trying to get an answer to your question and you got to go because it's from 1970 or whatever. That question for a 2024 product, 2025 product, they can't answer those questions either at all. Like to your point, like, well, I don't understand how this works. So people will come and they will, I don't think a Bitcoin life insurance policy makes sense. It sounds too risky, whatever. They're just like going off of the words, the things that they don't like. Well, okay, well, explain this policy to me. And they can't. The agents can't explain it. The regulators can't. They're just trying to regulate it and just trying to make it more difficult. And like you said, these illustrations are out of date the second that policy goes in force. They're useless.
Yeah, so there is definitely this, like, from the user's perspective, it definitely feels like a variable universal life or an index universal life, in the sense that there is like a fundamental exposure to the price of Bitcoin. But the actual policy, right? You get the policy form. It's weird, actually. In our policy, most people think about like how much premium they want to pay, where usually you're thinking about how much coverage you want. But anyway, people think about how much premium they want to pay. And then we tell you the death benefit. And then there's like, it is a guaranteed table of values, right? There's
Right.
surrender values.
Right.
There's like, how much can the policy loan? You can see it all in black and white. Now, what is the value of one Bitcoin going to be in a year? I don't know. And in fact, that's part of the reason we are so like individually aligned with this business. Like, If I knew what the price of Bitcoin was going to be tomorrow or next week or next year, I'd be in a different business, like be running a hedge fund. But this idea of like digital money, a digital store of value that's like globally and universally accepted, like I feel confident that that is going to increase in purchasing power, like in 10 years, 20 years, 30 years, 40 years. And that's how we try to get like folks to think, and it's aligned with the way a lot of Bitcoiners think. I think another thing, actually, because you said it a certain way, is like, we don't really see ourselves as being in the business of convincing people who don't have Bitcoin to buy Bitcoin. We see ourselves as being in the business of like, have you decided to have some Bitcoin exposure? And like, here is an efficient way to do that provides protection for your family, that grows tax-free, that gets passed on tax-free. So like, this is the right box for 5 Bitcoin if you decided to hold 5 Bitcoin. And that's partially like just because it's an easier sales process, but it's also to go back to alignment with our users, and even the regulatory questions you had at the very beginning. It's like, I think where you get in trouble in general, morally, ethically, regulatorily, is when you sell something to someone that they don't need or they don't understand. So we just don't see it as our mission to convince a lot of people to buy Bitcoin. We see it as our mission right now to help people who've decided to buy Bitcoin to have a great way to own it. So if you're out there and you've already decided to like get some exposure to the ETF and you're planning to hold it for 10 years, not day trade it, I can just assure you that our policy is better. If you've decided to just like buy and hold Bitcoin on Coinbase or whatever, Kraken, then like you should buy a life insurance policy. But if you have like, think that Bitcoin is like some, fairy money that's going to zero, like I don't recommend you buy a policy, right?
Yeah. Well, and really, that's the right way to be talking about life insurance anyway. So when you sit down with someone, going back, and then they're like, question it. It's in anything, really. Like if someone was like, whoa, I want to start a podcast, but I just don't believe in podcasts. Okay. So like, what are we talking about then? Right. And that's fine. And there's no judgment. I remember sitting down very early in the career and someone's like, well, my wife will just get remarried. Cool. Like, then I guess our conversation, like, why am I here? And that's fine.
Yeah.
Right. So it's the idea of, it's convincing the unconvincible is a complete waste of time.
Completely agree. And I don't know if people are convincible or unconvincible, but it's on them to come around, not like me to. Yeah. Exactly.
You have plenty of other things to do. Absolutely. No, I think this is great. I'm fascinated by it. I mean, clearly people are as well. There's investors in it. And, it's not, like you said, it's not for everybody. So where do you go from here? Like, what are you thinking about? Like, obviously this is happening fast. It's still 0 to 1, but that 0 to 1 can go 1 to 10 real fast. What's on your mind today? Like this week? Like, what are you building? What are you working on specifically?
Wow. This week, our website's pretty bad and a bunch of people have still bought policies. So we're, redesign. The application is actually amazing. We put a lot of effort into like filling out the application and the flow, but the actual like marketing site that lives at like meanwhile.bm, like it's not that great. We're going to launch that fixed deferred annuity. So we have to like build some products from that. We are working on we've had a few requests for people who want to do 1035 exchanges, which is like a tax-free exchange from their existing permanent life policy. And that's like a whole like operational nightmare of like,
okay, so there's two things there. So if you're taking that 1035 and that's coming from another life insurance policy where there's like cash, right? Like, how does that going to work? And then I want to get in the marketing side of it real quick. But
yeah, so there's a lot of operational details here about like we have to send paperwork to the carrier and are they going to respect our like Bermuda carrier and like all this stuff. But operationally, how it's going to work is like we will get a check from carrier X for $273,473 or whatever. And then on the day we cash that check, that will go to us basically a single premium version of the policy. And then you'll have the Bitcoin policy from there.
In that scenario, are you purchasing the Bitcoin for them?
Yeah.
Okay.
We can purchase the Bitcoin.
That's going to transition quick. And typically, though, people are transferring their Bitcoin
No, by quick, like same day.
Yeah. But typically, if someone's buying this policy, they have the Bitcoin already. They have the one Bitcoin, and they're going to give it to you. They're going to transfer that to you, or are they sending you cash and then
Yeah, everyone has Bitcoin. I would say the individual's tax situations can be complex, right? So if you have a bunch of Bitcoin, you've decided to do like first in, first out on your taxes, then like paying can incur capital gains. If you think paying is capital gains taxable, which is also a whole question that like I can't give you tax advice on. So we do have some people who want us to buy Bitcoin for them, which we will not do in general, but do in the course of paying premiums for people. Anyway, to go back to the question, like, yeah, we're launching an annuity. We want to launch this single premium version of the product, which is basically for 1035s. And then we're doing a lot of work to allow people from other countries that want to buy the policy to buy the policy. So usually that's just about like know your customer requirements, like how do we check the IDs of people from the UK? And then it's also that product designs are similar, but not quite the same, right? So our current product, the Bitcoin limit 10 pay whole life product, is like clearly designed for the Internal Revenue Code section 7702, which is about like what is and isn't life insurance, and like how do you not be a modified endowment contract? How do you like get to borrow against the policies tax free? All that stuff, right? So it's very much like purposely designed for Americans. You know, I'm making it up, the like German tax code is slightly different in its requirements of like what makes whole life tax advantage in Germany. So we also are like doing all that work country by country to like make it so that those people, when they come to us, can buy the product in a tax advantage way.
The last thing I want to ask you, going back to that marketing piece of it, and you're dealing with the people like Sam Altman, frameworks, other companies, investors, you've been through it all, you know all these different people, starting up companies. You just mentioned your website. It's not the best, right? These companies aren't coming in here and frameworks is like, you know what? We're out. Like, you think you have a great idea, but the whole we don't like the website. That's not happening. And you see a lot of other founders and startups where there's so much effort and time going into, say, the website. It's got to be perfect, and they're losing. You see what I'm getting at? Like, what is being said behind the scenes for the people that are actually starting companies as it relates to that marketing presence on the front end of what they're building?
Yeah, I guess what I'll say is we in particular have an idea so unique and different. We have other fish to fry before we fixed our website being beautiful, right? So again, we raised a $40 million Series A, co-led by Framework and Folger. These are like two very respectable crypto funds. In some ways, our argument was we have users who have gone through absolute hell to buy our policy. This is like a strong indication of their like interest and desire to like buy the thing we have, right? So what I would say is the less commodity your product, that is the more unique it is, then we need to do better marketing, but like the less in the beginning, if everything needs to be perfect, right? Reid Hoffman has this old line that like, if you aren't embarrassed by the first version of the product, you waited too long. But there were some things as an insurance company that like we had to get right? Like, we had to get underwriting right. We had to get the pricing right. We like had to get the regulatory approvals right? So we just had like so much work to do that, yeah, our first, 50 to, 50, 100 policyholders, like they slogged through a website that doesn't look amazing. And that's absolutely fun.
Yeah. I love it, man. Well, I appreciate it. I mean, the messaging alone is what got me. You see a tweet, right? Go out. I get to watch some YouTube videos, listen to some podcasts of you, and I'm in, right? I hadn't even seen the website up until probably the last minute of this whole thing.
Yeah, so the only thing you need to do on the website is click the Get Started button, and then you're in a beautiful flow again, right? So
yeah, and it's working for somebody.
Yeah, exactly.
So, well, Zac, I appreciate it. How do people get a hold of you? Where do they learn more about Meanwhile?
Yes, they can go to that currently not great, but soon to be great website, which is at meanwhile.bm. And honestly, if you sign up, like basically what you do is you answer like 10 basic questions, like your name, your address, a social security number, so we can run KYC. And you answer these basic questions. And then like me or someone on the team, we literally email every single person who signs up who's qualified, and then we have a one-on-one conversation with them. Because like this is, even if it's an agent or whatever, like it's a new product, it's a new thing. So we have a pretty high touch process. So that is how you get in touch with me, which is you sign up on the website and you will get an email from me or somebody like me.
Yeah. And you're pretty active on X, I believe, too. So you got some stuff coming out there.
Yeah. I think my DMs are open. I don't get a lot of DMs, but
yeah. I DM'd you. So I appreciate it, man.
There you go. Okay.
This is fascinating. We got a little bit more technical than maybe we typically do. Because like I said at the beginning, I'm curious myself. I know a lot of people that listen or that I talk to are as well on this type of thing. And this can be like, wait, where does this coming from? And that's why I want to ask all these questions. And I appreciate you taking the time to come on here. I know you're busy and doing all these one-on-one calls and building a lot of stuff. So thank you, Zac.
Thanks so much, Eric.
Thanks for listening to Entrepreneur Perspectives. This show is produced by Quiet Loud Studios, where we create podcast writing and original media. Learn more at quietloudstudios.com.